In this video, guys, we're going to look at using the FX crosses to trade the major currency pairs. Stick around. Hey guys, warm welcome to you. Welcome all traders, especially currency traders. Okay, so this is kind of adding an extra layer of decision making, perhaps a filter into your trading process when you have a bit of a dilemma or a quandary. So let's say you're in this situation, you're trading away and you're trading the currency pairs and you get a buy signal on both Euro US dollar and on pound US dollar. So this is the majors, Euro US dollar, obviously Euro against the US dollar, pound is obviously pound against US dollar. What do you do? Which one do you take? You can only take one, you only want to take one. Which one are you going to take? This is where you can look and get a little bit more insight into what's going on and what's actually moving the market. Or actually moving the pair, should I say. So first of all, you go and you check your euro pound. Now this is what we're trading here. If we were trading other currency pairs like yen, we want to look at these two items here, these two currencies here. How are they crossing? What are they doing? So we go over and we look at our chart and we want to compare it to how is doing against the US dollar. So let's say, for example, GBP US dollar is lifting up, Euro GBP is moving down. We would look at this and we would say, actually, do you know what? The pound is strengthening against the euro because it's in a downtrend. If it's the other way around, we would say that the euro is strengthening. So if the pound is strengthening against the euro, it means the pound is the stronger of the two. And for all other things being equal, i.e. US dollar, we would be better to trade the pound rather than Euro US dollar because the pound is outperforming the euro when you're just isolating those two because it's falling down. Now, is it as simple as that? It can be, right? If that's a trending market and you assume that's going to continue, then that's great. Now, you can take it one step further and you can say to yourself, actually, you know what? We're hitting some support here, or we've been in a range and this is holding very, very aggressively. Maybe I don't want to do that. Maybe I want to go onto the Euro US dollar because I think that actually we might get a little bit of a bounce off that. You get the idea. You've got to look at how the pound is going to strengthen or weaken against the euro and then use that as an extra weight to take the trade against the US dollar. You've already pre-identified that, right? You've done your homework, you're ready, and you think it's one of these two. You're just trying to allocate capital to the one you think is the best. So that's why we're stripping out the USD version of it, because you've already made that decision, and you're just looking at the euro pound version of it and saying, okay, which is the direction that's most likely, which one's most likely to be the strongest, because you want to trade the strongest, right? You're trading strong versus weak. You're trading, you want to see one outperform the US dollar. You've already identified that, which is now going to be the most powerful. Okay, I've identified this. I think it's going to be this one because of the analysis I've done on this, whether you think it's going to continue with the trend or adding that extra layer of complexity into it and saying, you know, that support's going to hold. Whatever you're doing, you're giving yourself a little bit extra edge. Now, are you going to use this all the time? No, you're probably not. And what's to say you can't just split up your position size across the two? And that way you're isolating any Euro US, you're going to get ones outperforming the other and you might be able to split your risk a little bit. That makes perfect sense as well. But there are some times when you don't want to do that. There are some times when you just want to allocate capital in one market because you want to watch it, you just don't want to mess around with other things, and maybe you've got a slight preference for one anyway, and this just adds extra weight and extra fuel to that decision making process. So don't forget, this is just an example for Euro US dollar, GBP USD. We can do it for other currency pairs with other crosses, GBP JPY, Euro CHF, that kind of stuff. So something to bear in mind, guys. Have a look at that. You maybe don't need to integrate it straight away with your trading strategy, but something to perhaps consider. So when you're analyzing stuff, have a look and see how maybe analyzing the cross would have influenced your decision making for the better or for the worst in your prior trades, and then see if it's something you want to integrate into your future trading, whether you're trading futures or spot. All right, guys, take care. See you in the next one. Keep the risk managed. Whatever you do. Bye bye.